Hello, everyone. We have made it to midweek once again. This is Wednesdays with Wendy, where we make small business ownership less stressful, one step at a time. Today, we're going to take a trip back in time to high school math class, but just for a minute. I'm not going to leave us there. And we're going to talk about um, a thing I saw in my high school math teacher's room. It was in, I think, 11th grade, maybe 10th. Anyway, I'm sitting there. And you know how teachers have posters on the wall, with their rules or inspirational sayings or stuff like that. Well, my math teacher had one that said, "Lies my calculator told me." And then had some things listed. And I remember looking at that and thinking, "Lies? Like, it's a calculator. It does everything correctly. When you put two numbers in and add them, it gives you the right answer. When you subtract, it gives you the right answer. That's why we use them, because it does the right answer, whereas our brains don't always give the right answer. That's why we use them. How could a calculator lie?" And the whole point of the poster and the examples that it gave were that, okay, if you put in the right numbers, if you put in those numbers, it's going to tell you, the correct answer, whether you were adding, subtracting, multiplying, or dividing them. It'll give you the right answer for those numbers. But what happens if you put in the wrong numbers? That's what we're talking about today with QuickBooks. If you are just joining us for the first time ever, my name is Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace at tax time and throughout the rest of the year. Okay, I get to share screen. We're going to use the QuickBooks sample company again. And fun fact, before I did this, I had to go in and make the QuickBooks show what it was gonna show. So that's why I'm a little late today, because I did all this yesterday, and then when I logged in today, the sample company had reverted back because, like I said, it's a fake company with fake transactions. So that was fun. Anyway, all right. So here we are in sample company, and if you are doing your own bookkeeping, this screen should be familiar to you. It's the bank transactions screen. You can find it over here on the left-hand side. This is where you have your checking account, savings account, credit card. They're all connected to the bank and QuickBooks, and then you go through and you categorize all the transactions. All right, that's the easy part, right? Okay. Step you should be doing is reconciling each of those accounts. And the way you do this is you get, once the previous month has ended, the bank or credit card company will send you, a monthly statement. It'll show the beginning balance, everything that got added, everything that was subtracted, and an ending balance. And you want to reconcile that in QuickBooks to make sure that everything that happened in real life is in QuickBooks, and what we're talking about today, everything that's in QuickBooks actually happened in real life. So here's what I want you to see. I have gone ahead, we're reconciled through April, and this is the May reconciliation. And you can see I have cleared all of the transactions except for two. These two weren't on our bank statement. But when you're doing it yourself, you think, oh, well, look, the difference is zero. QuickBooks even tells me you did it. The difference is zero. Your account's ready to reconcile. And you can hit finish now. But before I do that, let's go take a quick look at this. Okay, so if we go to the bank register, I don't want to do it that way. Let me show you this way. Okay, this is where you enter the information. Edit the information from your statement. So, the bank statement or the credit card statement, this ending balance comes from that statement. Okay. And then the date. And so that is what we're looking at. According to the bank, your account had $376.62 in it at the end of May. Okay, cool. And so we look at QuickBooks and we're like, hey, look, we did it. We got the little green thing. We do finish now. You reconciled this account. Woohoo. Otherwise, you're done. It's all happy for you. And you're happy because you think, oh, wow, I did some bookkeeping. I reconciled an account and it matched. Okay, so the bank statement says there should be $376 in that account. Now, here's what we can go do though. We're going to run our balance sheet, and this is a report. It shows everything the business owns, its assets, and everything it owes, its liabilities. And so we want to do this year to last month. Let me see if I can get this to work right. Okay. No, not June. This year to last month. Okay. Okay. So remember the bank statement said we had $376. So when we look at our balance sheet for that bank account, it should say $376. All right, here we are. Uh-oh. That's not $376. That's a negative $3,623. What's up with that? But we reconciled. We reconciled it. We got the little green check mark. It gave us the little celebration. You did it. Yay. What on earth is going on here? I reconciled it. It should be correct, right? Well, like I mentioned at the beginning, lies your QuickBooks told you. If you don't put the right numbers in, you don't get the right answer, even if you did the right operations. Okay, so let's go back and see if we can figure out why that number is different. And I promise this is going to be quick. It's not going to be painful. And you don't have to be a CPA to understand this part. Okay, so if we look here, you can go right here to see what we just reconciled. You can also look in the bank register, but that's a little harder to find. So we're going to look back at the report. Every time you reconcile an account, QuickBooks produces this beautiful report. Tells you the account, the date, what day it was reconciled on, and who reconciled it. So if you've got different people in your company working with QuickBooks, that's good to know, provided they have different logins. It's going to be whoever is logged in. It doesn't necessarily mean who's sitting at the computer. Just FYI. Okay, so if you look at this statement beginning balance, statement ending balance, there's that 376 that the bank says we have. Okay, look at this amount. Uncleared transactions, $4,000. Well, that's interesting. What's an uncleared transaction? An uncleared transaction is a transaction that is in QuickBooks but was not on the bank statement. Now, the reason for that, there could be legitimate reasons for this. Perhaps you either wrote a check or made some type of payment right at the end of the month on, let's say, the last day of the month, like May 31st. So you went ahead and recorded that in QuickBooks for May. Well, everything takes at least a day to clear, to go. If it's a check, you're going to have to mail it, and that takes several days. But even some digital transactions can still get kind of like after the cutoff. So that could be a legitimate reason why something is in QuickBooks but wasn't on the May bank statement. It'll probably show up in the June bank statement. So that would be a legitimate reason that it is there. But what happened here, if you look, so these are checks and payments that's cleared. Cleared means they showed up on the bank statements. The bank knows about them. So we go down here. Deposits and other credits that have cleared, those are deposits that showed up on the bank statement. Okay, if you go down here and look at this, uncleared checks and payments as of May 31st, these two expenses are in QuickBooks, but they did not clear the bank. So again, the legitimate reason could be you mailed a check, like here, you mailed a check to Video Games by Dan on May 29th. And so obviously the bank didn't have that by May 31st, which was a Saturday. So that's probably okay. It's going to show up on the June bank statement. But what about this one on May 14th? Now, it's true, you could have mailed a check to this person and they just haven't cashed it yet, because that happens. But what I see a lot of times when you're doing your own bookkeeping, you are entering things in QuickBooks and you are either not matching them up correctly with the transactions that come through the bank feed, or you've put it in differently. Somehow it came through the bank for a different amount. A lot of times this happens with deposits, like they take out the credit card fees or the bank fees. So you don't get the full amount of that deposit. And those will really throw you off, because if you're recording deposits over here, but they're coming through the bank at less, and then you get both of them in there, then your balance is really off, and then your reports don't make any sense. So if we look at this expense, this is one that for whatever reason, it got recorded and it should not have been. So we're going to go, and now if you're in the current month, you can delete it. If you are 100% sure, you can delete that one. Okay. So that helps a little bit. If we go back to our balance sheet, because remember, our goal is to make sure that the amount that shows up on the balance sheet for the bank account is the same amount that shows up on the bank statement for the bank account, barring any truly outstanding transactions. All right, let's see if I can get this to work again. Okay, so we took out that $3,000 check, and you can see the balance has changed. Instead of being 3,623, it's only 623. It's still negative, but that's because of that $1,000 check that we wrote at the very end of the month, which just didn't make it to the bank in time. It will probably show up in June. And anyway, so that is what I want you to know this week. As far as if you are doing your own bookkeeping, watch out for these things. If you are entering transactions in QuickBooks directly, not just from the bank feed, but you're entering invoices, you're entering deposits, and invoices, either customer invoices, money you're getting, or vendor invoices, money you're paying. Be very careful and make sure you match those up in the bank feed, or your financial statements are going to be inaccurate. And maybe it doesn't matter on the balance sheet so much, but if you do this, if you record deposits and they come through the bank at a different amount and you record those as deposits too, you've essentially doubled your income, and you're going to have to pay taxes on double your income. And I don't know a single person in the world who wants to pay taxes on double the income they actually made. So, all right, that is, let me stop sharing here. Okay, that is our quick little QuickBooks lesson for this week. If you are DIYing your bookkeeping, if you're doing your own QuickBooks, that's perfectly fine. But please, please, please learn a little bit of the accounting, learn where the numbers are going, so that when your tax preparer or your bank wants to see your financial statements, you can give them accurate information and not inaccurate information that will end up causing more problems than it solves. And if you don't want to do this, if you don't want to deal with this, if you're like, oh my gosh, that doesn't even sound fun, then you need to go to my website and book some time for a free consultation and let me see if I can help you get your bookkeeping up to date and accurate. And then every month I'll do it for you, and you don't even have to worry about it. You can go do what you like to do and let me do this and handle it. And then this is off your plate entirely. All right. That is all we have for this week. Remember, no one is born knowing how to do this. Trust me, no one's born knowing how to do QuickBooks. I know this. It is not taught in school either. If you're feeling lost and overwhelmed, that's why I'm here to help. Again, go to my website, book some time, like this post. Even if you just see the first few minutes of it, like it. And if you feel like dropping a comment, go ahead. You don't have to, though. But if you could just like it, that would be awesome to know that you have seen it, because we never know where it's going to show up. All right. Y'all have a good day.